Everyone has their own personal way of trading. Now, to me, trading, when I first started trading, I thought that this was the greatest way to make money that there is, because what could beat sitting in front of a computer, just making money, probably more money than I could make in a job, and working only a few hours a day. Nothing beats the feeling of confidence if you can make money on a regular basis that way. Problem is that, like most people, when I started out, I lost money. And of course, I didn't lose a ton of money, because when you start out, who's going to put a lot of money into a trading account? But I practiced, and I thought I was ready. And when I started trading, well, it turns out I wasn't so ready. And I was trading basically as a scalper. And as a scalper, I basically lost money more on a consistent basis than I made. But after 20 years, I've learned how to trade, and it's not a scalping situation that I trade anymore, but it is a situation where I do take short-term trades. Now, let me explain what I mean. I depend on 6 trade setups. I depend on 2 key areas, and I depend on the Taylor trading numbers. Now, those 6 trade setups I teach in my trading school, and I don't expect you to enroll in my trading school, but at the same time, let me tell you what they are. GST, TMC, gap, support and resistance, time and price, trend, momentum, and candlestick. Those are the only 6 trade setups that I use. I also use and I want to know, the intraday high and the intraday low. That tells me a lot. These are 2 key areas of prices that tell me where the market is likely to trade. And the key to being profitable, to being successful, is getting a sense of where the market is likely to trade. And how do I know that? Well, Taylor tells me that. The Taylor calculations tell me that. Now, Taylor calculations are numerical calculations, and they're not difficult, but they're not that simple either. If you've ever read the Taylor book, you'll know that it's almost an impossible book to read. But the calculations are averages of averages, and those averages are based on how prices have moved over the past several days, from lows to highs, from highs to lows, from lows to lows, and from highs to highs. And it's based on averaging out these numbers that tell me where the market is likely to trade on any given day. And don't take it from me. Taylor has been used by almost every professional trader, and not just in the S&P E-mini market, because the numbers apply to almost all other futures markets. I'm not so sure about stocks because I don't know. I don't trade stocks. But nevertheless, let me go over it again, because I think I can help you become a more successful trader. With 20 years of experience, I know that there are only 6 trade setups: gap, support and resistance, time and price, trend, momentum, and candlesticks. And I use these 6 trade setups in my short-term trading. I didn't say scalping. I say short-term trading, and my short-term trading is within a longer-term time reference. I trade the Taylor trading zone. And the Taylor trading zone is simply the range between the Taylor calculated support and resistance. And you see it here on this chart. There are 47 points in today's trading range based on the numbers that I've calculated for today. These numbers change daily, and I calculate them each evening after the market closes. I use these numbers in conjunction with the intraday high and the intraday low, because very often, well, not very often, but occasionally, Taylor has to be transposed to the intraday high or low. And the reason for that is that, unlike 75 years ago when Taylor put these calculations together, the market today is affected by weekly announcements by the Fed, by news that comes out that travels around the world almost instantaneously, and this affects the markets. We didn't have that. Taylor didn't have that. 75 years ago, the markets were pretty steady. They went up a few days, they went down a few days, they went up a few days, they went down a few days. Today, the market averages are upset by or skewed by the news. But surprisingly, The trading range that's calculated within the daily Taylor calculation, the trading range is remarkably accurate. And what do I mean by that? Well, this trading zone, this is my Taylor number for today, the Taylor calculation for today that I put on my chart. And the support is down at 39.75, resistance at 40.22, a 47-point range. Yesterday, let me go back a day. I'll show you where Taylor was. Here was Taylor. Prices came in the middle of the trading zone and went up to the calculated high, went down, traded, basically reversed themselves, but then ended up at the end of the day. They ended up right at the other end of the trading range. So if I know that the trading range is likely to be 47 points, and I know where the intraday high or low is, I have a pretty good idea of where the market is going to end up at the other end of the day, right? Okay, so that's the big picture. But within the little picture, I have to also be cognizant of my trade setups and also the stochastics. And I use stochastics for one reason, and I use it in conjunction with how the market is moving. Stochastics indicate where the market is either overbought or oversold within a relatively short time frame. And if I'm trading long and the market is overbought, well, I want to get off at that point and let the market collapse a little bit, all right? Because we know that the market, if it goes up, it goes up, but then it goes down a bit. But then it goes up again, goes down a bit. So the market is always going to vacillate, but basically, where is it going? Where is the market headed? The market always has a number in mind. It always has a target. And for me, the target is denoted by the Taylor trading zone, but I also need to know the intraday high or low because it gives me more confidence. And I also need to get off and back on based on my trade setups, my 6 trade setups. At any rate, if you want to try the Taylor trading numbers yourself, I make them available as a monthly subscription. The first week is free. You really should. It'll improve your trading. Try it with paper trading. Try it with micro e-mini trading, and you'll find that this is going to completely change your mindset on how to trade. And if you are not trading successfully, if you're not making money, I suggest you try this. You're going to want to shoot for 2 goals as a trader. The first, of course, is profitability. The second is consistency. Without consistency, you're not going to be able to stay in the game. Whether you make money or you lose money is a result of your trading metrics. So what do I mean when I talk about trade metrics? This spreadsheet gives you an example of the information, the metrics that you need to keep track of in order to become a consistent trader. The 2 metrics that are particularly important that you're going to want to improve your performance on are represented in this spreadsheet right here. The number of winners per day, the percentage, and you want to keep this around 70% if you can, and the cumulative average income or loss per trade over time. Keeping these metrics takes a little bit of arithmetic, and you need to do it at the end of your trading session each day. This spreadsheet provides the metric calculations in an automated format. We enter the date. Let's say we make 7 trades, and 4 of them are winners, and on those 4 winners, I earn $300. The percentage of winners and the number of losers and the percentage of losers are calculated automatically. I also enter the amount of money I lost on my 3 losers. I lost $125, okay? So entering that, the spreadsheet automatically calculates the other metrics in order to automate the entire process. Everything on this sheet is what you need and what will tell you whether or not you can become a consistent trader and will help you improve your metrics. And again, the most important critical metrics are the percentage of winning trades and the cumulative average per trade. When I say cumulative, I mean over time. Anyone can make money one day, 2 days, but over time is the key. I created this spreadsheet and it's automated, and all you need to do is enter in the white columns the total number of trades for the day, the number of winners, the total profit, you enter the loss, and everything else is calculated automatically. I've made this spreadsheet available for you to download. If you'd like to have it, it's only $10, and you can keep these trading metrics very easily without undue arithmetic on your part. You can find a link to purchase this spreadsheet at my site at timelessdollar.com.